Hello everyone, welcome back. This is Si-Wing Yi, and today's video presentation will be very exciting. I'm going to talk about the Austin, Texas housing market around right now is February 2023. Now, bear in mind, towards the back end of this presentation, I have some very exciting recommendations, something you may not have anticipated. So please stay tuned, watch the entire 15 or 20-minute video, and you will be pleasantly surprised how I'm going to, if you will, twist the negative narratives around Austin, Texas. You may not know, I feel very uncomfortable doing fake type negative headlines, that doom and gloom scenarios that most YouTubers do out there. I have too much ethics and too much moral to do that. So I just provide very accurate data, very great data that is, you could make the argument is indisputable, right? So because I'm a risk investor, I look at the investment component of it, although I do discuss the housing market in a big picture, but I've been doing real estate investing for many years, and I have guided many of our real estate investors to buy cash flow properties in very prudent real estate markets in a certain part of the country. So one more thing I'm going to ask of you is, yeah, watch towards the end, watch the complete video. You can see a lot of value from this video. I hope so. And furthermore, please, if you see the value of this video, please smash the like button and subscribe to my YouTube channel, and also subscribe to my email list below once you finish this video. So without further ado, let's go over the amazing transformation of the Austin, Texas market, housing market. And a lot of people, it is a nosedive. Yes. It is a major correction. Yes. Is it a crash? Not necessarily, but I would love your comments below after you watch the video. And I know everybody had different opinions, whatever. Anyway, without further ado, let's go ahead. Let me share my screen first and foremost. And the first thing is I'm going to briefly go over the Redfin weekly and monthly data as I've been doing for a while now. So anyway, so I'm not going to spend too much time on too much details because I have a few more slideshows that I created for you toward the second half of this short video to give you some real exciting, opportunities based on my personal opinion, based on my 30 years of real estate investing experience. All right. So the median price of in Austin, Texas, according to Redfin, throughout the year 2022, as you can see, I said it's amazing at the peak of the market before the interest rate had risen back in April and May. The median sales price in Austin Metro is $573,000. Not to mention, if you look at the past 3 years during the pandemic boom, Austin or no different than Phoenix, Arizona, Boise, Idaho, and Las Vegas. It's kind of a real estate boom, pandemic boom town and bust, boom and bust town, if you will. But bear in mind, this is just a short-term correction. I want all of you to really look at long-term. What I mean by long-term, 5 and whole 10, 15, 20 years. That's how you reap the benefit of real estate investing, whether you are a primary homeowner or whether you are a real estate investor buying rental properties to rent it out. All right. Does that make sense? Again, please make a comment below. So let's just say the people that bought at the bottom a couple of years ago, 2 to 3 years ago, and a median price is 330. And then from 2020 to 2021, this is amazing. This is a historical occurrence that we will never see again. The skyrocketing of home prices during the pandemic with the historical low interest rate. So as a result, from 2020 to 2021, we have average, some more, some less neighborhoods, 39% appreciation in just 1 year. Then from 2021 to 2022 at the peak, back in April, May of 2022, last year, another 24%. So we're talking 24% plus almost 40%, like 60 to 70% appreciation. This is totally mind-boggling. However, ever since the interest rate has skyrocketed from 3.5% to 6 to 6.5 to 7% throughout the last half of 2022, as you can see, the demand of homes have subsided. The affordability factor has drastically decreased. Sellers are not selling, buyers are not buying. So we have a paralyzed. So there in Austin, I know the market is very, very different. It's a local situation. There's no such thing as a national market. And I'm just talking about Austin Metro. Just so you know, the prices have decreased, quite substantially from the peak, in the summer of 2022, all the way down to whereby if you can go over year from 2021 to 2022, we have seen a minus 3% price reduction in the Austin market year over year. So even though we gained a lot at 24% at the peak, summertime 2022, now December, January, minus three. So you could make the argument that on the average, the median price in Austin, Texas has decreased around 20%. I know every neighborhood is different, what have you, but it is what it is, right? So again, it's a short-term correction, and we could talk about the another narrative I'm going to provide you very shortly. So stay tuned, all right? And a couple of other things I want to do. Everything, have been trading downward. Pending sales for the past 9 months has really, dropped significantly for obvious reasons, lack of demand and lack of supply. So you have a very neutralized, paralyzing market. Pending sales has been going down. New listings year over year has been gone down ever since last summer, 2022 has gone down, and all the way from here to all the way down to here, which is very, very significant. So new listings has gone down. Active listings again has gone down also slightly from the peak. Active listings, which is still not that many. So and then let me see what else I need to go over before. Even price drops has decreased dramatically from the peak 4 or 5 months ago, and price drops has significantly decreased. This means the sellers understand the reality of the market and they're pricing their homes in alignment with the current demand and supply. Now, one more thing, as we begin the new year, January, February, we have seen a lot of real estate activities in selected market, in selected neighborhood. We're seeing a little bit of bidding war. So just so you know, things are really with the mortgage rate has gone down a little bit. Like a couple of weeks ago, it had gone down to less than 6%, the 30-year fixed rate mortgage. But now it has creeped up recently, the past few days, all the way up to 6.5%. So we're still seeing a mortgage rate volatility, but the projections and the expectation is that the mortgage rate sometime this year, 2023, will go below 6%. Only time will tell. Nobody have a crystal ball. Couple more things I want to discuss over here that I'm going to segue into my own PowerPoint presentation. I'm going to go over the month supply. As you may not know, 5 to 6 months of supply of inventory is a healthy, balanced market. And right now, I'm surprised that the Redfin is seeing so much volatility in the supply of inventory. So this measurement, I do not necessarily agree. There's something wrong with this data. But regardless, based on this metric alone, the weaker supply is 19 months. If you divide 4 into 19 months, we have like 5 months supply of inventory. So you can make the argument if we're teeing toward a buyer's market, at least temporarily. But I feel that once, if the mortgage rate, goes back down below 6%, you will see more buyers coming out of the sidelines. And we see more buyers with a lack of inventory, then we will see supply dwindling very, very quickly. I'm not going to show another chart. Another chart indicates that we are still in a very, very low supply of inventory nationwide. So any one of you thinking, Austin market or any other market for that matter is going to crash, well, you are potentially wrong because all the data and all the trends that I have watched and monitor have clearly does not indicate a crash, just a temporary correction. So you can always access my other videos where I talk about that. I talk about the deal and demand be greater than supply moving forward. But suffice to say, let me segue into a very, very interesting slideshow of which I just done and just be with me as I do this. So here's the thing. Okay, post home prices still up big time. Now let's focus on Austin. A number of our investors 2 or 3, 4 years ago and beyond have purchased rental properties in Austin. And I know a lot of home buyers, primary home buyers have also purchased. You're thinking, wow, Austin has decreased dramatically. For those people that purchase, as you can see, from March 2020 to October 2022, we're talking, less than 2 years. The average home prices in Austin have increased a whopping historic 75% appreciation, which is mind boggling because on a historical basis, home price appreciation nationwide for the past 50 years on a historical basis is only 3 to 5%. So this skyrocketing appreciation is not going to it's not sustainable. And right now, this past year, we have seen that. But even if you project, okay, if you project March 2022 to today, February 2023, with the reduction of home prices in the past 9 months in Austin, 20 to 30%. Still, even if your home lost value in the past 6 months, 20%, if you purchased March 2020 until now, your average appreciation in Austin is still a whopping 57%, from 75% appreciation up until, last summer, 2022, until now, February 2023. Even though you may have lost 20%, you're still up 57%. So it's not doom and gloom for any. But the problem is, this is on paper. If you sell your property, of course, you're at the mercy of the down market as we know. But I teach my real estate investors to buy and hold for the long term, and they have all done that. You have to, whether you're a primary homeowner or your real estate investor, you invest for the long term, 10, 15, 20 years, and keep your property forever. And for those people that have to sell for whatever stressful reasons, then you're subject to this reduction of prices, because if you stay put, you know, nothing's going to happen to your property because you just invest over time. So I'm going to segue into my other website here, as I stated, which is going to be very, very interesting. So anyway, so here's the, I'm going to just share with you what Redfin has shown. You see the supply of inventory has been very, very steep. Excuse me. As you can see at the low point 2021 with low mortgage rate and the lack of supply, 1 month of supply, if you will, in Austin. That's why we have seen skyrocketing of appreciation back in 2021. But now supply of inventory has increased substantially until now. So supply is getting better. So right now, in a small window of opportunity for first-time home buyers, and for investors to re-enter the market, because there's not that much competition, and the builders are providing a lot of incentives, which is going to go away very, very soon, in my opinion. So sales also has been down because demand has, a lot of people just staying in the sideline because of the mortgage rate volatility, inflation, potential recession, and the economy. All these things going on out there has really paralyzed a lot of people. So home listings has gone down in the past 9 months. Pending sales, home listings, active listings has gone down. So therefore, home sellers are not selling because they lock in at a historical interest rate. So very, very few homes are available for sale. The builders they are not constructing due to the higher interest rate in the past 9 months. So we can see a shortage of homes moving forward. But I'm not going to spend too much time on it. You can watch my other videos. But he's a very easy information. This is the value add, if you will, in my opinion, for this video. Now, some of you have been thinking, what type of homes, why Austin has home prices have decreased so much? We heard about that. So what type of homes are the main issues of their decrease? Well, here's the partial answer, in that all the higher price homes, you could say luxury homes in Austin, you could say the upscale homes in Austin, these types of homes has uh, have the largest decrease in prices. So if you look at, I took the liberty of looking at the specific zip codes from May of last year, 2022, until December, in a mere 7 months or so. Look at this upper end homes in different zip codes. Look at the price decrease of $1 million home have decreased over the past 7 months from these two dates to 731, a reduction of $326,000 and a 30% decrease in price at a home. So this is just one example. Look at all these high price homes, 900K, 800K, 700,000. This upper price range have seen the highest price reduction. Just bear in mind, a lot of the entry level homes in Austin Metro, like anything entry level homes from 300 to 500 price range, the entry level homes, which is very, very desirable for obvious reasons, they are pretty much have maintained themselves. They only decreased 5, maybe 10% in the past 9 months. So you can see this drastic price reduction, like 30% to, 30% price reduction in the past 8 months. And again, only these high priced so-called luxury homes had to decrease this much. So the question I'm going to ask of you is, okay, let's what's the strategy? Okay, if you have not heard about this philosophy, I'm going to share that with you. You buy low, sell high, right? So what you could do really is, now that this is only mainly about primary homeowners. As a real estate investor, I would not recommend you buy this kind of homes because you're not going to cash flow, right? Based on 25% down payment. That's ridiculous. So this is a primary homeowner potential action plan. I'm sharing this with you. Now, for those of you waiting the sideline, for those of your primary homeowners that are qualified, you could afford to buy these upper end homes in Austin, Texas. And there's more inventory now. Not much more, but still, so you have less competition. So you can negotiate with a lot of these homes, these luxury homes, or from new builders. In case you have not heard, a lot of new builders, they are reducing their prices. They try to get rid of the inventory. They're providing so much builder incentive. So you could see, if you're ready to buy, you can see them on the sideline and you could afford it. You're qualified. You have a good stable job, and you have cash reserve. You can qualify even at a 6% rate, right? And you can potentially stay at your home for 5, 7, 10 years or more. Who's to argue that you should not take advantage of this plunge in this upper scale homes and buy it right? So buy it now. So at least on paper, you buy at 20 to 30% discount from not 6 months ago. So I could make this argument that you could time the market. I don't like the word timing the market. Is my investment philosophy is buy and hold long term. You can never time the market correctly, historically speaking. I mean, you could make the argument that you could time the market and buy at, on paper, 13% to 30% discount from the peak that was back in May or of last year, 2022. So some of you guys are thinking, oh, I'm still waiting for a market crash in Austin. I'm waiting for a 20% reduction. I don't know. I mean, I don't think this price reduction is going to happen too much longer, especially when we have, the interest rate has been decreasing in the past 9 months. The inflation is subsiding. The Federal Reserve, they're not going to, when inflation or decreasing, the interest rate is going to go lower and lower. So, and the job, the job market is very, very strong. We're at a 50-year low in unemployment, 3.5% right now. So job market is great and all that. And mortgage rate is, is expected to go lower hopefully next coming year. So I don't think, in my opinion, this kind of home prices is going to go down too much more, maybe 5% more in the next few months. But for them to go, for those of you who are waiting for a crash, so you can wait, 6, 4 months later to achieve another 30% the reduction of prices beyond what I just showed. I think you're speculating too much. I think I could say the word, you made me delusional. I don't know. I hate to use such harsh words, but these high end home prices. Let me recap these high end home prices. It's an opportunity. It's a small window. Okay, I could feel it. I could feel you're not going to see this 20 to 30% reduction of prices from those new construction luxury homes or resale homes giving these metrics. Time will tell. I don't have a crystal ball, but this is a great time to pull the trigger. to buy at below value and with the benefit and all that. So if you're an investor, obviously there's no way you can buy any kind of homes higher than, $400,000 single family homes and expect the cash flow. Okay. I'm not going to explain my definition of cash flow, but suffice to say that let me share my screen once again and going back to this slide. And let's get back to my final slideshow. So if you're a risk investor, you have to know the numbers. Okay. And again, watch my other videos, how, what to buy, what the number that makes it work. So there's no way you can buy $500,000 or $1 million home as a rental property. There's no way. The maximum rent you're going to get about is about 3,500. So you're going to have a huge negative cash flow. Even if you buy, you could buy with cash. Who has $800,000 cash to buy a home? Even if you do, don't put all your eggs in one basket. You have to spread out your risk to using financing, the power of leverage. So my recommendation, if you're an investor, you come back into the market, you want to buy cash for properties in Central Texas, Austin metro area. This is the type of recommendation that I recommend. Buy a investment property away from the expensive Austin metro downtown and surrounding 30-mile radius where all those 600K and $1 million homes are located. Those are not for investors. These are for primary home buyers. So my recommendation, as we come down to the conclusion of this video, you buy a property 1 hour north or south of the core of Austin and much cheaper price, so you can match up the rent with the value of your buying. So you can put 25% down payment, even at a 6% or 6.5% investor mortgage rate, you can still cash flow. So this is the best metric I can provide you. Buy a single family home somewhere 1 hour away, give or take, north or south of Austin metro, around, like as you can see here, $260,000. You could get a projected monthly rent of almost $2,000 at 25% down payment and 6.5% mortgage rate. At the end of the day, your renter paying you $1,950 per month will offset all your mortgage expenses and your other debt service obligations, and you still have a limited monthly cash flow per month of around $100 or give or take. So this is a good metric to start with. So don't cry over a little bit of cash flow because you're buying a property for the long term. Rental property, income property is a multi-dimensional asset class. You can look at my other videos. So the pro forma, the numbers that I show you is just one first year projection. If you project over the next 10 years, you can achieve multiple associated by income property. So the takeaway for this property, for this video, that is that whenever you see a negative doom and gloom situation, steep price decline, there's always opportunity in a crisis. And we are going through some, short-term crisis and all that. He's not doom and gloom. So there's always a silver lining, if you will, that everything is not doom and gloom. There's always opportunity in any market. And I'll just show you a very specific recommendation for primary homeowners. You can come back into the market and get some discount, even with a fairly high mortgage rate at 6%, give or take. And for investors, you need to pull the trigger right now. The competition is not that high because I believe the buying frenzy could happen right now. Spring buying season, I see a lot of people getting off the sideline. So if you buy too late, whether you buy these high price homes in Austin at a reduction of prices right now, if you buy now with less competition, you have more negotiation power as a buyer. Similar with an investor, you're not competing against other investors, which you might be a few months down the road. Just watch this video, the date that I put this together, February 2023. Let's see whether I'm right or wrong. So that's all I have to say. So still a great buying opportunity in times of crisis. You just have to know when to pull the trigger and just get off the sideline. So if you see a lot of value from this video, please smash the like button and subscribe to my channel, and also write your email into our database. You will receive, you become a free member of our real estate investing community. You can learn a lot of great free education about investment opportunities. All right. Thank you so much for watching, and to see you, and I will see you on the next video. Have a nice day. Bye bye.